Well, good afternoon, students. Hope my dear students are all taking care of yourself and you are fit and fine. So we will continue with what we have been doing. Okay. So we have seen that in the previous class, we have done the treatment of reserves and surplus and accumulated profits. Along with that, we have learned about the accumulated losses also. Today we will see the treatment of Workmen compensation fund and investment fluctuation fund. Okay, so it is very important for all of you to know this particular concept. I'll just explain to you how we are going to treat, and specifically we are going to learn about worksman compensation fund and investment fluctuation fund. This is very important for your examination purpose also. Okay, so I'm going to share the page with you all. You can refer to your book for solution of more sums, and also you can go on practicing all the illustrations, and after finishing the illustration you go for the exercise. This will give you a better understanding, okay, about the concepts. So I'm just sharing with you the page where we are going to begin. And before I go to the solution, I will just explain to you the basic journal entry once again. Okay, so what is the basic journal entry of transferring of reserves and accumulated profit? One part of that is also the worksman compensation reserve and investment fluctuation reserve. Okay, so how you are going to treat it? All these reserve and fund, they are showing the credit balance. Okay, and what you have to do is that you have to just close them, debit them and close. Okay, just close them by debiting, and after that what you are going to do, just close them by debiting, and after that you can just simply use the particular amount and transfer it, just a minute. Okay, transfer it to the capital account. Here, see, reserves debit, profit and loss account debit, worksman company fund or reserve account debit, to investment fluctuation fund or reserve account debit. All these are having credit balance, right? That all will be closed. Okay, and either if it is required, okay, if the money is required, you will transfer to the respective account where it will be required, or else you will just transfer to old partners capital account if capital is fluctuating. Okay, or current account if the capital is fixed, right? And same in the case of loss. I have already discussed all these things, so I'm not going to repeat it once again. We are going to go with the practicals. Today's practical. Okay, so we will take illustration number 27. Yeah, illustration number 27. What is given here? P, Q and R are sharing profits and losses in the ratio 3 is to 2 is to 1. This is their old ratio, right? 3 is to 2 is to 1. And what has been decided is that it has been decided to share future profits and losses in which ratio? 4 is to 3 is to 2. Okay, future profits and losses we are going to share in the ratio 4 is to 3 is to 2. Okay, now what is given after that? With effect from 1st January 2008. Okay, this is going to happen. After that, following is an extract of the balance sheet given, and we are going to treat it according to this particular situation. Now try to understand. The old ratio was 3 is to 2 is to 1. The new ratio is 4 is to 3 is to 2, and the workman compensation reserve was having 60,000 rupees. Okay, workman compensation reserve was having 60,000 rupees. Now let's see what is the information given about that. First case is given. There are two situations. Okay, the first situation is that if there is no other information, if no information is there, workman compensation fund, what is that? Try to understand first the meaning of that. Workman compensation fund means the amount of money that has been kept for compensating the workers. Okay, many times in a factory, okay, what is happening is that many times in a factory or industry, there are certain incidents or accidents that are taking place, and due to that, many of the employees are suffering. Okay, so just to compensate them, okay, we have to compensate them. If they are working for us and if they are getting injured, we have to compensate them. So just to compensate them, what we have to do is that we have to pay certain amount of money to them for for their recovery or for compensating them. Okay, so this particular amount of money which we keep for this type of work or this type of purpose, we call it workman compensation fund or reserve. Okay, so for that is the basic concept. So this particular money is created out of profit. Okay, out of the profit of every year it has been created. Now if it is not needed, what you will do is that that amount of money you will transfer to the capital account, and if it is needed you will keep it. How much it is needed you will keep it, and the rest amount will transfer to old partners capital account. Okay, in the old ratio. So the first case, what it is saying, if there is no other information, if the information is not given, then what will you do? What is your workman compensation reserve? 60,000. There is no information. No information means there is no information of any claim. Okay, किसी भी claim, कोई भी दाबी नहीं हुआ है, कोई भी claim नहीं हुआ है. If there is no claim, then whole money 60,000 P, Q and R will take in which ratio? 3 is to 2 is to 1. Okay, so let's see what is the journal entry. As I already told you, workman compensation reserve is showing credit balance. Okay, it is showing credit balance. So you have to close it by debiting, right? So workman compensation reserve account debit 60,000, and this will be transferred to partners capital account, right? So since it is a profit, so it will increase the part of capital. So capital shows credit balance, and to increase credit, we have to credit it, isn't it? So that is why partners capital account will be credited. How the journal entry appears? See, workman compensation reserve account debit 60,000 to P's capital account 30,000, to Q's capital account 20,000, to R's capital account 10,000. These are transferred in the old ratio, that is 3 is to 2 is to 1 ratio. Is it clear, everyone? Okay. Then now let's come to the next part. That is the case number 2. What is so told here? If a claim on account of workman compensation is estimated at how much? 24,000. If the claim is estimated at 24,000, if the claim is estimated at 24,000, what will be the treatment then? See, how much I am having? 60,000. What is the claim? 24,000. So from 60,000, 24,000 I will keep for the claim purpose. See, I have not paid it. Only the claim has been given, right? So I have not paid it. So I not show the cash account. Okay, only I'll show that this particular from this 60,000, 24,000 I will separately keep it in another account named, either you can call it provision for workman compensation or workman compensation claim, any name. Okay, on that name you will transfer 24,000, and after transferring 24,000, what is the remaining balance? 60,000 minus 24,000, it is 36,000. The 36,000 will be transferred to P's account, Q's account and R's account, okay, in their capital account in 3 is to 2 is to 1 ratio. See, let's see what is given here. How will you close it? Workman compensation shows credit balance, so close it by debiting. Workman compensation reserve account debit 60,000, closed. Now it is from this 60,000, how much will go for 24,000? 24,000 will go, right? How much will go for the claim? 24,000. So where will you transfer? To provision for workman compensation claim account. How much? 24,000. And remaining 36,000 will be transferred to P, Q and R in the ratio 3 is to 2 is to 1. How? To P's capital account 18,000, to Q's capital account 12,000, to R's capital account 6,000. Okay, in this way. So what is the narration? Being excess workman compensation reserve transferred to capital account in the old ratio. Okay, from 60,000, 24,000 has been transferred to the provision, and the remaining balance is transferred to the capital account. Clear? Okay, now let's see the next one. Okay, so now we'll take illustration 28. Okay, just before that, what I will do is that I will show you one more situation where this taking the same example. Okay, I will just show you another situation where we are going to see a different treatment. Okay, a different treatment will be there. I'll just show you that, so that we will just take one Word file so that it will be easy for you all to understand it. I'll take the same example and I will explain you. Okay. Yeah. So hopefully all of you are able to see a Word document, Word file. I'll just increase the size of the letter so that everyone, all of you can see. Yeah. So taking the same example, I'll just mention it in a short form. Workman compensation. You can call it reserve. You can call it fund. No problem. That's no problem in that. What was the fund value? It was having a value of 60,000, isn't it? And also I will mention about the partners. They were P, Q, and R, and their profit sharing ratio were 3 is to 2 is to 1. Okay, and this was the balance. Now I'll give you situation number C, case 3, or case C also you can call, no problem. Case 3, what you are getting here, let in this particular case what I will do is that I will show you excess claim. Okay, Workmen, there were claim of workmen compensation of rupees. Okay, there were claim of workmen compensation of rupees, say 70, let me make it easier for you all, 72,000. Okay, this will be easy for calculation purpose. Yeah, so what we are seeing here, this is a situation where we can see that okay, just a minute. You can just make it the size, okay, the margin, so that it is easy for you to understand and reflect. Okay, fine. So PQ and R were partners and their all ratio was 3:2:1. We don't need the new ratio here, so I'm not writing it. It's the same example. Okay, workman compensation reserve was having 60,000. And what are you seeing in the case number 3? In the case number 3, we are seeing that there has been a workman compensation claim of 70,000. 70,000 was the amount of claim. Okay, so whenever there is a claim of more than the amount, what was your amount of reserve? 60,000. Okay, you have kept 60,000 for the claim, but you can see that the claim has risen to how much? 72,000. So what is the extra? 12,000. So 12,000 extra is our loss. Okay, how to treat, just see. First of all, we'll close the workman compensation fund to the extent of 60,000. How will show? See, workman compensation reserve, let it be reserve or fund, whatever it is, you can write it, there's no problem. Reserve account debit. Okay, how much you are going to debit it? Just a minute. Yeah, debit 60,000, because you are having only 60,000 rupees, so you cannot take more than that. So what is your additional loss? Additional loss is 12,000. So that additional loss will be shown in the revaluation account. Whenever there will be additional loss, that will be showing in the revaluation account. Revaluation account is an account where extra losses are shown. Okay, revaluation account is an account where the change of assets and liabilities, the extra losses are shown. Okay, so revaluation account will be debit how much? 12,000, right? And now what will happen? What is our total loss? 72,000, isn't it? From there it will go to provision for workmen compensation claim account. Okay, claim account. What is the workman compensation claim account? 72,000, right? It is 72,000. Clear, everyone? So being, what happened? Being workman compensation fund claimed. I just write on the short form so that it is easy to just to save the time. Okay, workman compensation reserve claimed. Okay, so this is the basic concept of this particular transaction. Now what has happened here is that you can see there is an extra loss of how much? There is an extra loss of 12,000, right? For the 12,000, you have to, what you have to do is that you have to show it in the where will show this loss? This loss will be going to the partner's account. Okay, so this is a loss. This extra 12,000 is a loss. So who will bear it? Partner will bear it, right? Who are the partner? P, Q, and R, right? So whenever partners are bearing loss, capital account is always debited, because capital shows credit balance. If it is a loss, so it will be debited, right? So P's capital account debit. How much? We'll just find out later. Q's capital account debit. R's capital account debit to revaluation account. $12,000, right? So what will be the amount? 12,000, just find out. In 3:2:1 ratio, it will be, first case it will be 6,000, right? Then in second case it will be 4,000. In the third case it will be 2,000, right? Okay, so being revaluation loss transferred to capital account. How it is a revaluation loss? Because we can see that there is an extra amount of rupees 12,000 that we have to pay to the pay for the purpose of workman compensation, isn't it? So that is why it is a revaluation loss. So, and the loss is always transferred to the capital account debit side, so it is transferred in the same way. Is it clear, everyone? So this is how the whole situation will appear for you in this case number C, which is not given in the question. So I'm just highlighting you here. Okay, so you can take a screenshot of this and you just make a note of that, and along with the question, you just note down the question in your copy and you write it everything. Okay, all the notes should be written in the copy properly. Fine. Now I'm going to here again the same page that we were dealing earlier. We will go to the next question now, illustration 28. Hopefully the illustration 27 is clear along with the extra question. Okay, right. So now we'll go to illustration 28. What is given here? See, P, Q, and R are sharing profits and losses in the ratio of 3:2:1. This is their old ratio. Clear? Now what is given here? They are deciding to share the profits and losses equally from 1st April 2008. From 1st April 2008, the ratio will change and will become equal. That is the new ratio is 1:1:1. Clear? Following is the extract of the balance sheet. The information has been given. And what has been given in the information is that investment fluctuation reserve is there of 3,000. Now try to understand what is the meaning of investment fluctuation reserve. Investment fluctuation reserve. The meaning of investment fluctuation reserve is that whenever we invest some amount of money, okay, in any company or any business house, what will happen is that a very risky situation arises in the stock market. Okay, and every now and then there is a huge fluctuation in the stock market. Price of the goods, price of the shares or debentures may increase or it may fall. Okay, whatever the investment you have done, it can change. So just to make up with the change, agar increase hota hai to no problem. If it is increasing, good for us. But if it is decreasing, if the value is decreasing, then it is a loss for us. So if it is a loss, if there is a loss, then that loss we have to bear, isn't it? That loss we have to bear. So for that loss, what do we do is that we create a reserve named investment fluctuation reserve. Okay, what we do is that we have investment fluctuation reserve. Okay, so this particular investment fluctuation reserve, how much fund it is there? It is 30,000. Clear? Now try to understand. The investment value was 5 lakh. and the investment reserve was 30,000. Fluctuation reserve मतलब अगर वैल्यू कमता है तो इसे एडजस्ट करना है. So we are expecting that at the most 30,000 will decrease. If it is decreasing, then also it will decrease by 30,000, not more than that. Okay, इससे ज़्यादा नहीं कमेगा. So the information are given below. You just check what is there. It case number 1. If there is no other information, if the information is not there, that means 5 lakh amount of investment is there and there is no other information, means there is no change. No information means no change. So what will happen? The whole amount of 30,000 that we have kept for this fluctuation, okay, if the ratio is changing, then this whole reserve will be transferred, because from the next date onwards new ratios will be applicable. So whatever reserve, whatever profit is there, they just take it away, because all these things are created out of their own profit. So now they will take that all the profits, all the reserves in their old ratio, because of the reason that this was created out of profit, and that profit was to be distributed in the old ratio. Okay, so what is given here? There is no other information, so you are going to take whole 30,000. Try to understand, this 30,000 has been kept for fluctuation, and if there is no fluctuation, no information means no fluctuation. So if there is no fluctuation, this 30,000 will be taken by the partners. How? Reserve will show, this investment fluctuation reserve is showing trade balance. Just debit it. You can see the entry, investment fluctuation reserve account debit. How much? 30,000. And it will be transferred to P, Q and R's capital account. In which ratio? In the ratio 3 is to 2 is to 1, old ratio. So that is to P's capital account 15,000, to Q's capital account 10,000, to R's capital account 5,000. Clear? That is what has happened here, that excess investment fluctuation reserve has been transferred to the capital account. It is not required. Clear? It is not required. Now what is the second situation? If the market value of investment is 5 lakh, here it is told that. If it is not told also, the meaning is same. If there is no information, that means the investment value is 5 lakh itself. No change, no requirement for investment fluctuation reserve. In the second case, they have mentioned it. If market value of investment is 5 lakh, number 1 and number 2 are same. No change. Okay. In the number 2 also same thing has happened. That means investment fluctuation reserve of 30,000 is not required in case number 2 also. Why? Because what is happening, what has happened here, what is happening here, 5 lakh was the investment and it is 5 lakh, so 30,000 is not required. So the same entry of case 1, that is investment fluctuation reserve account debit 30,000, to P's capital account 15,000, to Q's capital account 10,000, to R's capital account 5,000, will be the same repeated entry for case number 2 also. Clear? Now the next transaction, if the market value of invest, now remember another thing, if it is increasing also, now suppose the value has increased to 5,20,000, then also this 30,000 will be transferred. Along with that, there is a particular treatment I will show you in the case number 4 and 5. Okay, there are two situations I will show you in the case number 4 and 5 separately. It is not here. Okay, so what is given here? It is given that the investment was of 5 lakh and reserve was 30,000. Let's come to the case number 3. If the market value of investment is 4 lakh 88,000. Okay, if the market value of the investment is 4 lakh 88,000. Now if the market value of the investment is 4 lakh 88,000, that shows what? That the value of investment has, what has happened? It has decreased. How much? 12,000. So from this 30,000 you will make up 12,000 and remaining will be transferred. Remaining how much? 18,000 will be transferred to partners capital account. Let's see the solution. What will happen? Investment fluctuation fund is 30,000, so it will be closed by debiting investment fluctuation fund account debit 30,000 to, how much is the loss? 5 lakh minus 4 lakh 88,000, it is 12,000, right? So 12,000 will be transferred to investment account, 12,000, and remaining 18,000 will be transferred to partners capital account in the ratio 3 is to 2 is to 1. Let's see. So investment fluctuation reserve account debit 30,000 to investment account 12,000, to P's capital account 9,000, because the remaining 18,000 is distributed in the ratio 3 is to 2 is to 1. So P's capital account 9,000, Q's capital account 6,000, R's capital account 3,000. Okay, this is how the situation is appearing. Is it clear, everyone? Okay, so I will show you the next situation. Okay, just a minute. Okay, so now I will give you the next two situations in the taking the same example. Okay, remember this example. We will take the same example, and I am going to give you share you another page. Okay, sharing. Yeah, this is illustration 27. Now we will take for the illustration 28. For illustration 28. Okay, now what is the situation here? I'll take you the short form of that: investment fluctuation reserve, right? Investment fluctuation reserve, how much we are having? Rupees 30,000, right? It was 30,000. Just a minute. Yeah, and our investment value, just write down the investment value also. I'm just making it in here. Investment, it was rupees 5 lakh. Clear? Investment was 5 lakh. Yeah, investment was 5 lakh. Then investment fluctuation fund reserve was 30,000. Okay, and I'm going to take another thing: P, Q, and R. They were having profit sharing ratio as 3:2:1. Okay, this was the general situation. Okay, now after that, what will happen? Okay, try to understand this. This was the general situation appearing in front of us. Now we will see what happened to the case number 4 and 5. So case number 4, what I will do is that the market value of investment is rupees, let's increase it first, is rupees 5,20,000. Okay, one case I will give it 5,20,000. So it has increased. What will be the treatment? Let's see and learn it. Okay, the case number 4, this was case number 4. Now I'm going to give case number 5. In case number 5, what I'll do is that I'll just copy it from here so it just to save time. Okay, what is happening here? The market value of investment is here. What I'll do is that I'll just make it 4,50,000. Okay, here I'll just, for the convenient purpose, I am making it I just make it 18,000, 5,18,000, or say multiple of this one, so it will be 106 24 6 5,24,000. It's just a for the calculation purpose I'm adjusting it. Okay, nothing else than that. And here also I'll just make it 4,40,000 just for the calculation purpose, right? So that the calculation becomes very easy. So I'll take the first case number 4, and we can see that the investment, my investment was 5 lakh. I have kept for the fluctuation, I have kept 30,000, and the profit sharing ratio was 3:2:1. Now what has happened is that my investment value has increased. How much it has increased? It has increased to, it is, the total value has increased to 5,24,000. I invested 5 lakh. Now it is 5,24,000. So increase of how much? 24,000. 24,000 rupees बढ़ गया. Okay. So now what will be your treatment? See. So if it has increased, that means there is no loss, right? If there is no loss, means whole 30,000 will be my profit. In addition to this 30,000, there is another profit. What is the profit? The 24,000, isn't it? So how will we show? Just see. First of all, what we will do is that we are going to transfer the, we are going to show the profit. First of all, what is the profit here that we can show along with the transfer? Okay, I don't want to mix it, so I'll show you separately. That will be easy for you all to understand. So what is the value of increase? 24. So let's show the 24,000 first. How will you show? Whenever the value of asset is increasing, so it will be is asset account debit, investment. Okay, asset shows debit balance. So if the value is increasing, it will be asset debit. So asset account debit, how much? 24,000, right? Asset account debit 24,000. It is increasing, the value is increasing, so asset account debit 24,000. Okay, and where this profit will go if the asset value is increasing? If it is decreasing, if it is increasing, we'll show it through revaluation account. Okay, so revaluation account credit, how much? 24,000. Okay, revaluation is a nominal account. It shows our if the asset value is increasing, it shows our profit. So profit will be credit. That is why revaluation account is credit. So investment account debit to revaluation account. Being what happened? Being increase in the value of investment. Increase in the value of investment. Okay, increase in the value of investment. Clear? So this is how your situation is happening in the first case. There will be many entries here. Okay, at least if I break and I break it properly, then it will be 3 entries. I want to break it into only 2. So you will find only 2 changes. Okay, so this is the first one where there is increase in the value of investment. So I have just shown it through the revaluation. Now I will just show you the combination. Now this revaluation is a profit, isn't it? In the previous case, you have seen that revaluation was a loss. That was revaluation account was debited because there was a loss. So who borne the loss? Ultimately, so that particular loss was adjusted through um, this particular, what is the name, investment fluctuation reserve account, isn't it? And in case of workman compensation fund, I'll just show you. In case of workman compensation fund, see what was happening. There was extra loss of 12,000. This extra loss of 12,000, who were bearing? Partners, isn't it? In the same way here also, if there is extra profit, who will enjoy? Partner will enjoy. See here, there is a profit, so who will enjoy the profit? Partner, isn't it? So just see how I'm going to do it. First of all, I'll transfer the investment fluctuation reserve amount. Investment fluctuation reserve account debit. Okay, how much is the amount? 30,000. So I don't require this 30,000 anymore, so I am debiting and closing it, right? Is it clear? Then revaluation was there, profit, revaluation account debit. I am closing this revaluation amount also. Earlier it was a profit, so profit was showing credit balance. See in the previous entry 24,000. So that 24,000 I'm going to close it. Okay, so this 24,000 will be closed. After that, what will be the change now? Just see, this whole amount of 30,000 and 24,000, it is going to be transferred to whose account? It is going to be transferred to the partners account. They are going to enjoy it because this reserve also their profit, this revaluation also their profit, right? So it will be transferred and will be it will be it is their profit and it will be transferred to their partner account, right? Which side? Credit side. It will transfer to the partners capital account, credit side. Who are the partners? P, Q and R. So two P's capital account. How much will be the amount? Just see, I'm just showing you the calculation for the first case. What is the total? 54,000, isn't it? 54,000 into 3 divided by 6, the ratio 3 is to 2 is to 1, right? So how much it is coming? Just see, 54,000 into 3 by says 3 by 6 means ultimately it is coming to 27,000 rupees, right? Okay, then comes the next one. 2P is done. Then 2Q's capital account. 2Q's capital account. 2Q's capital account. So in Q's capital account, how much will be the amount? 54,000. I'm just still making a note for this one also so that you don't get confused anymore anywhere. Okay, and so I'm just making a note of that. It is how much? 2 by 3. So ultimately it is coming how much? 9 to the 18,000, isn't it? So that will be 18,000 rupees. And then next comes the third partner, that is to R's capital account. So R's capital account, how much it will appear? That is the same situation again. So it will be 1 by 6. So it is 9,000 exactly, isn't it? So that's how we are going to find the amount. Okay, this is their profit. So whole amount is transferred to the capital account. Now see what will happen in the narration. Being investment fluctuation reserve and revaluation profit transfer to partners capital account. Transferred to capital account. Okay, this is how your whole scenario will appear. Okay, now okay, let me highlight this one. Okay, so this is how your whole scenario will appear. That means what is happening here? I'm just repeating once again. 5 lakh was the value, now it has increased to 5,24,000. So extra 24,000 was the profit. So whenever the asset value decreases or increases, okay, so you are going to show it in the revaluation account. Clear? So that is why revaluation account is created here. Okay, so what will happen? Asset increase, so asset debit balance, right? Asset shows debit balance. If it is increasing, it will be debited. That is the investment account is debit, and the profit is there, right, of 24,000. So that profit will be shown in the revaluation account. So to revaluation account 24,000. Okay. Then next comes investment fluctuation reserve, that is 30,000, and this revaluation 24,000. Both are not investment fluctuation reserve of 30,000 is not required, and revaluation of 24,000 is a profit. So both are the profit which are going to be added in the partner's capital. So directly debit both of them. Investment fluctuation reserve account debit 30,000, revaluation account debit 24,000 to all the partners capital account in their old ratio. If you want, you can give it separately also, no problem. Okay, just to save time I have given in this way. Is it clear everyone? Okay, now I'll show you in case of loss. Now remember that if you have arrangement for the loss, now in this situation there was an arrangement of the loss. What was the arrangement of the loss? It was 30,000, isn't it? The arrangement of the loss was 30,000. Now if your loss amount exceeds 30,000, then only you are going to record in the revaluation account. In case of loss, remember that. Okay, in case of loss, if your loss is exceeding 30,000, then what you will do? If your loss is exceeding 30,000, then what you are going to do? You have to show the extra loss in the revaluation account. But if it is not exceeding, no need to show in the revaluation account. Okay, clear? Let's find out. We know that our investment value and all everything, right? We know everything, but still for your convenient I will just copy it once again, and I will keep it along with case number 5 also, so that you can easily compare and find out. So in this particular case number 5, what is happening? Hopefully the case 4 is clear to everyone. Okay, now we'll go to case number 5. What is given here? Investment value was also 5 lakh, same thing. Investment reserve was investment fluctuation reserve was 30,000, and PQ and R, they are showing the ratio as 3:2:1. Is it clear everyone? Now what is the case number 5 saying? Try to understand. Case number 5 is saying that the market value of investment is 4,40,000. Try to understand. 5 lakh was the value, isn't it? 5 lakh was the value, and today the value has come to 4,40,000. So ultimately what is happening here is the loss of 60,000. Clear? Loss of how much? 60,000 total loss. And how much you have already have with you? How much money you have with you? 30,000, isn't it? 30,000 amount of money you already have. What I will do is that let me make it little simpler, otherwise you'll just mix up with it. Let me make it 4,55,000. This will not create any confusion in your mind. The confusion can be 30 same. Okay, why I'll you automatically will understand why I'm change the value. You can just see the value of investment was 5 lakh. Today it is 4 lakh 55,000. So what is the loss? Total loss 45,000, isn't it? So from that loss you can make up how much? See how much you can make up. Investment fluctuation reserve was 30,000. So you can make up exactly. You can make up 30,000 from the amount of reserve. Investment fluctuation. Just a minute. Investment fluctuation reserve. You can make up how much? 30,000. So your net loss will be how much? Your net loss is going to be rupees 15,000, isn't it? Your net loss is going to be rupees 15,000. This 15,000 rupees of loss you have to bear it. Okay, this particular loss you have to bear it. Is it clear, everyone? So remember this particular concept. This is how we are going to show this particular loss. This 15,000 we are going to reflect it. Okay, because rest 30,000 you are going to take from investment fluctuation reserve. So let's find out the entry, what will be there. So first of all, investment fluctuation reserve, we have to take 30,000 and adjust this loss. And along with that, there is a loss of 15,000. So there are two losses. So how to do it? Just see. First of all, investment fluctuation reserve account debit is closed. Okay, is closed. How much? Full 30,000 we are requiring. We are taking it full 30,000. Then there is an extra loss. There, what is the loss? That will be, that is the losses of 15,000. So that loss will be going to a revaluation account. Okay, that loss will be going to the revaluation account. So revaluation account debit. Clear? How much is the loss? 15,000. So that revaluation account will be debit 15,000. Is it clear, everyone? Okay, so investment fluctuation reserve account debit. IFR means investment fluctuation reserve. Okay, investment fluctuation fund, investment fluctuation reserve. Investment fluctuation reserve account debit 30,000 we are taking. Then revaluation 15,000 the loss, and this both particular losses. Okay, we are going to bear it. How we are going to bear it? One part. Okay, the particular loss. What is happening actually? This particular 30,000 and 15,000 means the total 45,000 is what? The loss of investment value, isn't it? So that investment value we have to decrease it, because the investment value is decreasing. How much it is decreasing? Total 45,000, isn't it? So investment is an asset. Asset shows debit balance, and to decrease an asset you have to credit it. How much you have to credit investment here? 45,000 to investment account 45,000, because there is a total loss of 45,000. What is happening? Being decrease in the value of investment, being decrease in the value of investment. Okay, being decrease in the value of investment. Clear? This is what is happening here. After that, what will happen? Once it has happened, after that, this particular loss, this 15,000 extra loss, isn't it? 45 से 30,000 तो मेकअप हो गया. Extra loss कितना है? 15,000. This extra loss of 15,000 who will bear? Partners are going to bear in their old ratio. How it will be that? Loss होने से partner capital account debit, right? So it will be, this 15,000 will be transferred to partners capital account, that is P's capital account, Q's capital account, and R's capital account. So it will be P's capital account debit, R's capital Q's capital account debit, PQ's R capital, yes, capital account. I'm just giving it more space. Okay, P's capital account debit, Q's capital account debit, R's capital account debit, to, what will happen? P's capital account debit, Q's capital account debit to R's sorry, P's capital account debit, Q's capital account debit, R's capital account debit to revaluation, the loss. Okay, revaluation account. What is the loss? The loss is 15,000, isn't it? So what will be their distribution? 15,000 will be distributed in 3:2:1 ratio. That is, the first case will be 7,500, then will be 5,000, then will be 2,500. Clear? Is it clear, everyone? Okay, so this is how the situation will appear. What will be the narration? Being loss on revaluation transferred to capital account. Okay, if the capital is fixed, then it will go to the current account. We all know that, right? If capital is fixed, it will go to current account. This is how the entry will appear. These two cases were not mentioned in the question, so I have solved you here. And this will be the treatment will be same in case of all the situations that are going to appear in front of you in all the next chapters. Okay, the case, if the cases are like this, the treatment will be same. Okay, we are going to have admission, we are going to have retirement, we are going to have death of partner. In all the cases, the treatment of this thing will be same. Okay, so this is very important and significant for you all. So take a note of all these things. Okay, that is, one was of illustration 27, one was illustration 28, and the next one was case number 5 of illustration 28 itself. Okay, so I hope the concepts are clear, everyone. You make a note of it and you start solving it, all the sums from the illustration first, and then you go for the exercise. Okay, have a nice day, take care. We'll end up here.